Hello, this is Dan from InsideBars.com, and in this very basic introduction video, we're going to be going over what is an inside bar, how we can recognize it in the market, and how we can utilize this pattern to be more profitable with our trades. And that's what InsideBars.com is all about. It's an automatic alert system. You select the time frames and the tickers, and those alerts come out when the pattern has formed, and it's a heads up to pay attention to that pattern because a break is imminent, and with that break is going to come a clear entry signal. So as most of us know, a basic candlestick is made up of a high and a low, which indicates the complete range on the day, as well as the open and the close, which can tell us a bit about momentum, as well as who is in control of the day, whether it was the bulls or the bears. So the inside bars focus on the absolute range. We're concerned with the high and the low, not necessarily the open and the close. And what this shows us is that a range is tightening. We have a lower high and a higher low forming. So an inside bar is when the range of a candlestick fits completely within the range of the previous candlestick, showing a tightening range. So here is our mother bar. That is what we refer to as the candlestick with the larger range. And then the inside bar comes after it, and it forms a tightening range. If the inside bar were to come on the left side of the candlestick, that does not count because we want to show through time that the range is tightening. We have a lower high and a higher low forming, and it's usually accompanied by a decline in volume, and it shows us that an equilibrium is being reached. Now, why does the high and the low matter? Because of that equilibrium. It's a tightening range. And if you were to zoom in on any time frame, and you will see these inside bar patterns on every time frame. So if you were on the hourly time frame and seeing inside bars, if you zoomed into the 5-minute time frame, you would see higher lows and lower highs with a tightening range, and that leads to a point, a flex point, where we eventually have a break because you cannot get any tighter once we see the range just shrink, 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 and then we have our break. And on that break is when we see a break and a spike in volatility with momentum as well. And it's significant because it gives traders a heads up what to watch for on that break. It's usually declining volume, as I said, the tightening range, and the break is with a spike in volume. Oftentimes, I recognize that a break is about to occur, not only because the price level is so very clear, but it's because the volume spike is accompanying it. So what we're looking at for a break of the inside bar, let's say these two candlesticks have completely formed. We have the range of the inside bar, and on the third candlestick, if we break the high of the inside bar, it's a bull break, and if we break the low of the inside bar, it is a bear break. So it is the price level, the high and the low, that we are looking at to indicate the trade. Now, how do inside bars work? They develop in strong market conditions after breakouts or breakdowns. So you see a strong breakout, you see the price slow down and trade sideways while we consolidate. Here's an example right here where we have a large range candlestick on a breakout. Then we see a smaller range and a tighter range, 2 inside bars in a row before we finally get a bull break and continuation. So in this example, the bullish signal for entering the trade would have been the break on the second inside bar. As soon as the high of that inside bar broke, that's your bull signal looking for continuation to the upside. So the inside bar pattern, by definition, is showing us consolidation is occurring. And obviously consolidation most often occurs after a big move to the upside or a big move to the downside. So you can look at these and look at the macro or micro version. So the macro is the zoomed out version with just a few candlesticks. If this were the daily time frame here and we zoomed in, this is a micro version where we have, let's say these are half an hour candlesticks, and it shows us, rather than just a few candlesticks showing us highs and lows, this is showing us the range in between the highs and the lows, tightening range. It often occurs with triangle patterns or pennant patterns, but you don't even need to be aware of these trend lines because it's the high and the low that we are concerned with. And these trend lines are just a bit of a guide to show us when the flex point is coming as to when the break is most likely to occur, because we are running out of space and it's getting tight to the point where we know a break is imminent. So that's why these inside bars alerts are so significant, because it tells us, pay attention, things are tightening up, we're going to see a volume spike and a breakout from this tight pattern that we are currently in, and it's going to indicate the direction that momentum is heading. In this first example of inside bars, we're going to be looking at Apple on the daily time frame, and this was coming after a gap up on earnings back in February of 2017. So that is the preceding action being volatile and a strong move to the upside with big volume accompanying it. After that plays out, we see the volume drop off over the next 2 days and the range tighten. So the following day was an inside bar. You can see the high and the low completely fitting within the high and the low of the previous day, which is the mother bar. So we have our mother bar, our inside bar. Next day was another higher low, lower high, inside bar for the second day in a row. Volume dropped off again just barely. And then on the third day of this pattern, actually the fourth day, we see a bull break over the high of the previous day, and it comes with an increase in volume, and then from there it showed us bull momentum, and the bulls continued to the upside. So we see a very clear pattern, and this is a very simple pattern. Once you get it down, you can pick out these inside bars very easily visually by looking at the chart. So multiple inside bars in a row. If we were to look at it on the hourly time frame, here is the run up on earnings, and then this is when the consolidation begins. It's a tightening range. We're trading sideways. Look at the volume. Each period of volume is lower, 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 and then it spikes with the bull break here. So we had our high of the original bull move, our low on the consolidation, our lower high then formed, our higher low, lower high, higher low. There's our break. So a way that I visually mark these out a bit better is I put some lines where the candlesticks ranges top out. So I can see the lower highs, higher lows, and then we just patiently wait for that break. And getting a little cluttered in there, so I would remove that one because this is the top of the inside bar, the most recent one. And then there's our bull break on the candlestick as soon as we break above the previous high, and that is a volume spike. And then momentum, look at momentum go. It's up to the upside. So on the daily time frame, the high of this second inside bar was at 129.19. As soon as we break 129.19, that is the bull signal for entering a trade, and then we see the follow through to the upside. On this next example, we're looking at gold on the hourly time frame, and we're going to find an inside bar here. We can see we're in an uptrend of higher lows and higher highs. We're trading sideways and consolidating, and we're looking for a break, and here is an inside bar. So we can see the range here of this candlestick is 1241.97 is the low, 1244.01 is the high, and the next candlestick on declining volume fits completely within that range. As soon as the high of this inside candlestick breaks, that is our bull signal. It comes with a little uptick in volume, and then the move that follows it shows the bulls have significant momentum to the upside. So as soon as the high of this inside bar breaks at 1243.66, that is our bullish entry. And if we were to zoom out and look at it on the 5-minute time frame, it looks a bit different where we have our high, low, lower high, higher low, lower high, tight, 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 bull break on increasing bull volume, and then follow through to the upside. So same scenario where I would be drawing the high and the low of the most recent inside bar to be watching. That is the range of the daily candlestick that formed as the inside bar. And then as soon as we saw that move to the upside, we saw a couple hours of follow through with big time momentum favoring those bulls. For our last example here, we're going to be looking at a bearish break, and this is the weekly time frame for the biotech sector, XBI. This was back in September of 2016. We had a bullish move. We had an inside bar form. We had a mother bar. The inside bar, the range was very similar, but it was a lower high and a higher low. And then the following week, we saw a bearish break, indicating momentum back to the downside. So the range of the inside bar on the weekly time frame was 64.71 support and 69.08 resistance. As soon as 64.71 breaks, that's your bear signal to get into the trade. And looking at it on the daily time frame, it's a bit of a different view here, and we have our clear levels to be watching. With this was the high of the inside bar, the high of this day here, and the low of the inside bar on the weekly was right down there. And once we got that break, you can see it just signaled momentum to the downside, and we ended up getting weeks to the downside after that bearish break, and that all occurred right here when the low of 64.71 had broken. So at that point, we were in a very nice uptrend on the daily time frame for months at that point, and that is when things shifted, that little lower low that formed, and giving those bears that momentum they needed to the downside. So this concludes our basic introduction to inside bars video, where we can now identify what an inside bar is, explain what it represents, which is a tightening range of higher lows and lower highs, and a consolidation pattern, and what it means for the chart, a clear level where it breaks either bullish or bearish, signaling to enter the trade and letting us know momentum is in our favor. Make sure and check out the other educational videos for more in-depth trade analysis and other information regarding inside bars. Thanks for watching, and we'll see you soon.